Hey, everybody, and welcome back to another episode. Today, I'm going to go over what I'm seeing out there in the real estate market right now. We're going to cover a lot of grounds on who's being affected, what's happening, and what this could possibly lead to in the future. I think that there's no surprise that the interest rates have been a complete black swan event. Nobody saw this coming. It is going to have huge repercussions on everything in our economy. And I want to go over exactly what I'm seeing in my specific market and what I'm hearing from others who are investing across the country. So let's jump straight into it. Right now, for us specifically, we're in the single family land class. So we buy, sell, and build single family homes with land. We do land development. So we're doing everything from rezoning and titling land to developing and selling finished pads to builders to build on, to developing everything out and actually building ourselves, and we're even working on some build to rent communities as well. So looking at it through that lens, I'm seeing that there is definitely has been a huge pullback in the number of buyers for our single family houses. What's interesting enough is starting from the bottom going up, there is a lot of demand for affordable housing still, so that entry level housing is still moving. I can say that recently, especially over this month, there's been a pullback. Earlier this year, starting in 2023, we had a pretty solid demand for single family housing. Earlier this year, January, February, saw a pretty big spike. It kind of cooled off, and then when early spring hit, especially May, there was a lot of demand. I mean, it felt like the previous year before interest rates hit up. There was a lot, and then it fizzled out very quickly over the spring and the entire summer. And then we had like a little bitty pickup here in the fall, and then it just fizzled out. So buyers are few and far between because of the cost to buy a home. It's a lot more mortgage for them than they've got available, than they can afford. So that's a problem. But it's interesting. There's not as much traffic, but it seems like the little traffic you do end up getting a contract. We're seeing buyers, asking for concessions. So they're typically asking for more. They're asking for closing costs, and they're asking the builder to throw in a fence or a fancier bathtub or something in there. So you are seeing some more concessions, especially in that lower price point, to help out with the closing costs with the affordable market. As you get a little bit more expensive, things have definitely slowed. In my market, around the $600,000, $700,000, $800,000 price point, that's a tough price point because that's a move up price point. And right now, people they're not moving up. They're not upgrading houses. They're probably getting bunk beds for them to live in their current house and staying kaput. There's not a whole lot going on demand wise there. And that kind of continues up through, I'd probably say, like the $2 million point. What's interesting is I'm hearing a lot of guys who are in that higher end luxury market, people who have a lot of disposable income, who probably don't need to, they don't need to get a loan, is what I'm trying to say. I don't know why that was so difficult to get out, but they've got like $2 million plus cash and they can just buy a home. That's still going well if you've got the right product. What I'm seeing is, in the past, you could just kind of build anything and throw it out there and it would sell. There was so much demand. Now you're having to run a much tighter ship. And that's how I'm going to end this episode, is I want to show you exactly what's working in today's market and who is being successful, who I'm seeing be successful here. So as far as the builders go, they're being affected. I know that the national guys, they're very hesitant to expand to new markets. So typically when you have a national builder and they set up in like Nashville, they want to have a community going in every single suburb. So every suburb of Nashville, Tennessee, every national builder usually wants to have something going on there. So that's their expansion plan. Right now, they're not expanding into new suburbs or communities. They're staying kaput where they currently are, in markets where they've got the absorption and they understand that market and they know how their product's going to do. I can say that demand for land is still very strong. Earlier this year, the demand for finished lots, I've never seen it higher. Their builders did not buy anything in 2022 because of what interest rates did. And I think everyone was expecting some distress. And so now that they didn't see any distress and they haven't bought anything, their 2024 and 2025 numbers are off. They have got to get product to the market or they are not going to hit their revenue numbers. So there's still very strong demand, at least from the Lennar, the D.R. Hortons, the Ryan Homes, the big boys. They still want land. They still want finished pads. They have to keep the machine going. So we've seen a lot of demand right there. Our housing developments where we've built and sold, those have tapered off. Those have not done as well as the land development arm where we're developing land and selling the finished pads. We've seen much, much higher demand there than for our single family houses that we currently have on the market. I know developers are in kind of the same boat. They're being very particular about the developments that they want to take on, where it was just kind of tried and true and crazy a year and a half ago. They were buying everything they could get their hands on. Now they're being very particular about the developments they had, because last year when interest rates started going up, all of these developers had contracts from builders on these developments. They were developing the land, and the builders were planning on buying the finished pads. When interest rates went up, all those builders basically said, I'm out. They forfeited their earnest money. They said, we're going to hang tight. And that put the developers in a unique position because they were kind of sitting on inventory. Well, when the distress never manifested, all of that inventory basically got bought up by these builders. They basically said, hey, we're out. You keep it. Like, we're cutting ties. And then 8 months later, they were like, wait, do you still have that deal? Do you still have that deal? We need that deal. Oh, you don't have any more? Crap. Well, what do you have? That's kind of what we're seeing from the developer standpoint. From contractors, they're looking for work. It's not the crazy boom market that it was a year and a half ago. Contractors are out there looking for work. We've seen prices come down from labor. It looks like the supply chain has gotten better, not completely resolved, but you don't have whole communities sitting waiting for meter boxes or transformers anymore. So we're seeing the supply chain kind of stabilize a little bit. Pricing has definitely come down. Lumber's stabilized. So it's not quite as expensive as it was throughout 2022 and early 2023 building homes. You've seen some of those costs come down, albeit not back to what they were pre-COVID times or pre-after COVID times. It's still relatively expensive compared to the historic cost to build a home. So you are seeing prices come down a little bit and start to stabilize, and you're seeing more demand for work from contractors where you couldn't get a contractor to pick up an inch of the phone a year and a half ago. So we're seeing there. Here's what I'm seeing work in today's market. Everybody got fat and lazy over the last 8 years, probably realistically 5-6 years since 2018. Everybody got fat and lazy in the real estate market. Agents didn't have to work to move deals. Homes would fly off the markets. Builders and house flippers could just flip a house, throw it on the market, throw lipstick on a pig, and it would sell because you had these historic low interest rates. You had so many buyers chasing a limited amount of inventory. That is not the case anymore. The people who are succeeding in today's market are the businesses that run a tight ship. I was just on a call with the other day. We had somebody who is in the luxury renovation market. They buy homes, renovate, and flip in the Williamson County area, which is like the Brentwood, Franklin area. And these are very high-end homes, like $1.5 million, $2 million plus dollar homes. And he has not been able to sell his inventory. So he asked if I would be willing to take a look and see if there's any recommendations I'd have to move his inventory. And basically what we found out was he needed to run a tighter ship. He was not focusing on the competition. He was not looking at what the competition had that he didn't. He was not actively going out and walking the competition to see exactly what they offered versus him and really drilling down as if he were in the shoes of the buyer and understanding how they're making those decisions. So because he didn't have to in the past, he just put the home on the market and it would sell. So he's having to run a tighter ship, more focus on what your competition's doing. How can you be a little bit different? How can you just be a little bit better and just a little bit less expensive to move your inventory? So that bar is getting more, that bar to succeed and get your stuff moved it's getting finer and finer. You have to be better at running your business. You have to understand what your competition is, how you differentiate, and you've got to be a little bit better for a little less price in today's market. So people are having to get their magnifying glass out and really look at what they're doing underneath that magnifying glass. We're having to pull more absorption rates for the data. Used to, people didn't even need to pay attention to market data. They could just put their home on the market and look at it, right? And turn a blind eye to what the numbers actually say. Now we're having to pull absorption rates for certain price points in certain areas. We're underwriting, 20 homes right now, and we had to look and see, hey, what type of product do we really need to build here? Whereas we could probably have just built anything a year and a half ago and it would have sold. Now we have to be very, very specific about who the end customer is for this specific area and what exactly it is that they want and how we can differentiate our product. You've got to be different, and you've got to offer something that nobody else offers, and you've got to be competitive with what the current pricing is. So paying attention to the absorption rates for whatever price points are in the area or for who your target customer is going to be very, very important. I've already talked a little bit on the focus on the right product, right? I mean, you can't just build anything anymore. You've got to be very specific about what you're building and who you're building for. And lastly, the people who are running the tightest ships operationally. So, I can tell you for us, we recently went through and we cut a bunch of expenses out that, it was kind of nice to have. I'm going to be honest with you. It was nice, but we could live without it. In other words, are you running a lean machine? Are you going to be able to, if homes continue not to move for another year, are you going to be able to survive essentially? Do you have enough operating cash flow on hand to be able to sustain through this push? Because this correction that we're having, this volatile market, it is eventually going to go away, but it's going to shake a few people out. And then those who are remaining, when things do pick up, will pick up more market share, and they will make more money because of that. They will experience a lot more success. But you've got to run a very tight ship right now. You've got to get your magnifying glasses out. You got to cut your expenses. You got to look at, time to get rid of the B players and the C players, right? You need just A players on your team. If it's an expense that does not directly influence or increase that bottom line, you need to get rid of it. You need to have a tighter focus on what product you're building, a tighter focus on who you're building it for, a tighter focus on who your competition is, what they're doing, a tighter focus on how you can price your product competitively and still be different and offer something that they don't. So in today's environment, it all boils down to running a tighter ship. That's what you got to do if you want to succeed.